How often you meet with the team, my recommendation is every 3 months. And the reason you're meeting with them is because your income might fluctuate, number one. Number two, I want you to think like an entrepreneur on that conversation. Say, is there any new tax strategy you've done in the last 90 days for another client? What's the coolest thing you've ever done for a client? Can I write this off? Can I write that off? I just ask them crazy things, and then I say, in what circumstance has someone else maybe been able to write this off? And we start to think creatively. Remember, this is brainstorming. You're not talking to the IRS. You're not implementing in that call everything you talk about. It's just a place to think creatively and have them start being guided by the entrepreneurial mind versus the textbook mind of here's what everyone else has to do.
I'm really thrilled to be able to introduce those of you that don't know Garrett Gunderson to him, and to those of you that do, you know why I'm so excited to have him as a guest. So Garrett is an authority in a lot of different spaces. Garrett, early on in his career, had some content, some writing, some books that I thought were just next level, that were doing things that no one else in the industry was doing. I'm not sure if you've read any of his books, Killing Sacred Cows, What Would the Rockefellers Do, now titled What Would Billionaires Do, because the Rockefellers didn't want him to use their name and likeness, even though he did so in a very complimentary way. Those are incredible books. He's got a new book that I'm sure we'll talk about here, but more importantly, Garrett is a friend, someone that I just love to spend time with. I got a chance to hang out with him in Park City last time we were in town. Just really got a chance to get to know him. He's a family man. He's done one of the most incredible things, probably one of the most challenging things, from going from an expert in the financial space to being a comedian, a stand-up comedian, focusing on like financial information. And it was great because I was joking around earlier about how like I would love to incorporate more memes and more stuff in my content, because I think if we make finances funny, like there was one that we thought about sharing, maybe we will. Dane, maybe we can get that queued up, have Phoebe put it in the slides. But there's just so much you can do with humor, and I feel like he has crushed it. Garrett was our highest rated speaker that we had at our annual retreat last year for the Lifestyle Investor Mastermind. He's a wealth of knowledge.
I was the only speaker, so it was really impressive.
I didn't want to tell him that, Garrett.
No, yeah.
But he just has a way of describing money and thinking about wealth that I think is different than most. And he's effective at communicating it, but more importantly, he walks the talk. He does what he says. So what he talks about, what he suggests, what he teaches, he lives that life. And he's done a lot of cool things. He recently had, well, he had an exit, and then recently had a second exit from the exit with Wealth Factory, which was his first company, and just is an unbelievable person. So let's give it up for Garrett.
It's good to be here, Ben.
Well, I'm glad you're here. It's much better having you here on stage than hanging out in the back house.
Yeah,
so.
I've been staying in the casita.
But I hadn't seen him until today. That's a pretty funny thing.
I heard you guys were gonna crash my webinar yesterday.
Oh, we had some plans. We thought about inappropriately cladly dressed running through your webinar and through the room, since I have the key to the casita.
By the way, I'm feeling really good right now because over here he said that he saw me do comedy in December and that it was gut split. His gut hurt. He laughed so hard.
That's
so I'm going to record that and play it for my wife tonight.
So what's going on with you? You just ran an incredible webinar. You've got a book that's coming out. You somehow, in pre-sales, even though your book's not out, you're already a bestseller.
Yeah,
it's
in an obscure category. I just got the email yesterday, and they're like, you have the #1 new release in development and economics. So that just sounds like an exciting book, doesn't it? Everyone just can't wait to go get that. And then
he's an economist.
Yeah, it's like #5 in another weird category, #8 in another weird category. So I don't know how before a book comes out you become a bestseller on Amazon, but I'll take it, you know? I sent it to my wife. She was impressed, so that's great. I have a book coming out next week called Money Unmasked. I've been working on this for 7 years. There was no ghostwriters. I actually really learned to enjoy the process of writing. And it's my first book that I really feel has a an emotional connection. Like, you really will see who I am through the writing, so that if I could lead with that level of vulnerability, hopefully people get to a place they've never looked at in their finances, and they can heal from some of their money wounds, because I feel like our relationship to money is merely a reflection of a relationship we have to ourselves. And if we don't have a good relationship with ourselves because of the way that we view anything in our life that happened in the past, or our failures or our mistakes, that as we try to gain more money to solve that problem, we get pissed because money isn't strong enough to solve that by itself. Now, I think it's an amazing companion to a life well lived, which is my definition of wealth. And I took notes when you said, wealthy people, they have time freedom. And that's so key, because if you have a lot of money and no time freedom, what you're going to be is extraordinarily lonely and burned out, and ultimately will find a way to burn all that money because you'll be so frustrated about the process. And so I'm really excited about this book. And then I also was having a conversation with a couple people before, and they're like, you should do a kid's book. Now, let me tell you, I tried for 10 years, and I sucked at writing for kids. It was not good. I tried it on my kids. They weren't interested. But I teamed up with this woman, Julia Cook, who sold 3 million copies of kids' books, and we have a book coming out in January called I Am Money, and I Don't Grow on Trees. And I'm really excited for it. Honestly, the first time I read it out loud to my wife, I cried. I was excited to share it with my little nephew. He reads it all the time. So I'm really in this game of how do I use entertainment to educate? Because millions of people like you want to be educated, but billions want to be entertained. And so I want to speak the language of wealth into the people who aren't hearing it, because it feels intimidating. And that's one of the things I love about Justin, is he makes, Justin doesn't have to do any of this. I know some people that say they don't have to do the things that they're doing because it sounds good, but he genuinely has an amazing portfolio in the things that he's done to provide the lifestyle that he then talks about with everybody else. And I feel like he makes it so accessible and enjoyable along the way, and he's just so likable that you start feeling better about yourself when you're around. You got to have him introduce you sometime. It's really quite amazing.
Well, thank you. I appreciate that. And I was telling Garrett that I feel like of anyone that I get to riff with, he and I just have so much fun. I just feel like the chemistry's great, and I just love hanging out with him as a person. But then we can talk, philosophical. As you can tell, he's goes super deep, right? And I love that. And so I always look forward to this. I realize that you're here for this event, but to me, this is the banter that I want to have anyway, even if no one else is here. So this is such a blast for me. And my goal is that the things that I love, I want to invite other people into it. I think if I am experiencing a lot of joy in something, maybe they will too. Maybe, and maybe they don't even have to like it to experience it, right? One of my philosophies early on was anytime I was bringing anyone on my team out to anything I was doing, if I took them to the things that I liked, I noticed that they also had fun and liked them. And so that was kind of even where the podcast came from. I want to have these questions anyway, and why don't we just, other people can listen in on our conversation. And so, but being one of our highest rated, always, whenever you do anything, it just earns an easy invite back. And by the way, what's cool about Garrett is he's like, well, I have a really good tickets to a U2 concert tonight. So, the dates, it's kind of not great timing, but I'm gonna come. Let's just do it. So he's gonna stay as long as he can, and he's flying out and going to U2 tonight.
I just got a notification my flight's delayed, and that's great, because it's not so much that I'll miss the concert, but it's enough I can hang out with you guys a little bit longer. So it's the most excited I've been about a flight delay.
Oh, that's good. I love it. I love it. So I would love to get into, so yesterday we had a whole day on taxes. So we're not going to spend a lot of time today on taxes, but we need to spend some time on taxes. Some of you were not here yesterday, and you are great at taxes. I would love to hear some of your tax strategy, what you've done, the way that you look at the tax world. I mean, is it kind of like what we've discussed before and what I shared yesterday, where you have a playbook, the IRS says, here's the playbook, do these things, we're going to incentivize you, so you partner with the government to have better tax outcomes.
Do you think that when they named the state Texas, they knew it was going to be people moving here because of taxes, and it was just one letter difference? I just think that sometimes. So I'll share the framework, and then we can give hopefully some strategies that didn't come up yesterday. in the framework, but the framework will help you think about them, and I'll be relatively quick as we go through it. So there's really 3 buckets when it comes to tax. The first one is you've got to have the right team, and that can include up to 4 different people. One is bookkeeper, controller, or CFO, depending on the size of your organization. CFO is going to give you more pro formas, look at margins, and where controllers may be payroll. But the deal is timely data helps you save tax. If you don't have timely data, you'll end up doing something that's a big mistake, deferring tax versus saving tax. Most professionals have people delay tax, and unfortunately, I think that taxes could go up in the future because it's $31.4 trillion that needs to be managed maybe somehow. So that's what the government owes. So the second person on the team is a tax strategist. Unfortunately, most people have historians. Historians tell you what you owe after you've finished the year, where a strategist is going to proactively look into the second bucket and say, how do you maximize your tax deductions? The third one is a tax attorney. For me, tax attorneys are responsible for probably 2/3 of my savings. And they're responsible for the third bucket, which is classification or reclassification of income, which I'll explain in a minute. The fourth one is if you have a commercial property, you might want a cost segregation engineer so you can accelerate your depreciation for tax purposes. So the team is important. How often you meet with the team, my recommendation is every 3 months. And the reason you're meeting with them is because your income might fluctuate, number one. Number two, I want you to think like an entrepreneur on that conversation. Say, is there any new tax strategy you've done in the last 90 days for another client? What's the coolest thing you've ever done for a client? Can I write this off? Can I write that off? I just ask them crazy things, and then I say, in what circumstance has someone else maybe been able to write this off? And we start to think creatively. Remember, this is brainstorming. You're not talking to the IRS. You're not implementing in that call everything you talk about. It's just a place to think creatively and have them start being guided by the entrepreneurial mind versus the textbook mind of here's what everyone else has to do. So the second bucket is the deductions bucket. If you own a business, it's pretty simple. If you have been doing investments, you ask yourself, could this relate to my business, number one, and number two, if it does, document it. If you're not sure, that's why you have the quarterly call, because then you get to ask for that. Like when I took a trip to Italy, I was going to be there for a whole summer. I'm like, can I write off the trip? They said, well, not really. I said, well, I have how many companies? They said the number. I said, that's at least that number of days I can write off because we're going to do our annual corporate compliance meetings in Italy because we think better with wine than we do in Utah where they don't drink a lot of wine. Or at least they don't drink it around other people. It's all in a closet and that kind of thing. So there's tons of deductions that are out there. We were talking about it, there's R&D credits, there's employee retention credits, there's paying your kids. You could pay your kids just over $12,000. You actually have to have them do work to make it legitimate, but that could be completely tax-free. I've got both of my kids on payroll. This is the first event my son hasn't been to in the last couple months because he has a tooth infection, but he's been, carrying my books around, checking in the hotel for us, booking the car, listening to great conversations, all that kind of stuff. So that's another deduction. Like, to me, deductions are only part of the game, though. You can rent out your house if you guys talk to Gusta Rule for 14 days a year. That's tax deductible to the business. You don't have to claim it as personal income. On the other side, and the best time to do it here in Austin is when it's South by Southwest or Austin City Limits or whatever. F1, you can really raise the prices based upon what comparables are. So there's a lot of tax deductions out there, but what I really want to focus on is this third bucket of classification. There's 4 ways to reclassify your income. The first one is make active income passive. So if you own, if you had a business, but you had a physical brick and mortar, you want to charge the highest possible rent because that's going to be without self-employment tax. That's going to be 1099 income. Or if you own a business and you don't have partners, you could be an S corporation, take a reasonable salary and take the rest in distributions. The distributions avoid self-employment tax of 15.3% or at minimum 3.2% once it's maxed out. So we had a local company here in Austin where they weren't doing that, and it saved them $300,000 because they were making millions of dollars, and 3.2% on millions of dollars is a huge difference. And by the way, it was actually more justified to take the income that way than the way that we were doing it with the W-2. All right, so the second piece here would be ordinary income to capital gains. When you're wealthy, when you're in the mastermind, what happens is if you're making more than $650,000 of taxable income, capital gains is going to save you a massive amount of money. So maybe you have international clients, but you live in the United States. You can do an international sales company, an ICDISC, and take all of that income, capital gains, because they want to make sure the income comes to the United States, so they give you a break on international clients. This is the next strategy I'll give you. You got to be careful with, because it's more of a risk management strategy, and a lot of people abuse it. But an 831A or an 831B, 831As typically don't get audited, but they don't get as big of a tax advantage as an 831B. But as you set up your own insurance company, it can go up to $2.3 million pre-tax. You can invest it like an insurance company, meaning it can't be too speculative or has to be fairly liquid. And then after the first 18 months, you can start taking money out, capital gains. After that, it's every 12 months that you could take it out after you deposit it. And you can, again, defer that, but deferred to capital gains instead of ordinary income. So those are just two ideas of capital gains instead of ordinary income. The third one is tax-free. And tax-free, some of my favorite tax-free strategies would be a charitable trust, where you could actually donate a highly appreciated capital gain asset, like a business, a piece of real estate, a stock, into that charity of your choice. Like, what charity do you love? What charity would you like to benefit? You'll get a partial tax deduction for the donation, and when you sell the asset, there will be no tax on the sale, and then you can take between 5% and 50% income per year off of it, depending on the underlying assets and where you choose to invest. But when you die, the charity is going to keep at least 10% of what you donated. So 10% to a charity, or 20% or more to the government. It seems like an easy choice to me, There's other tax-free strategies, especially on business exits. I'll give you, if you have a business you ever plan on exiting, I highly would recommend you consider a C corporation. Because a C corporation allows you to sell with the 1202 exemption up to $10 million per partner if you've owned that for 5 years or longer. And then the fourth one on this reclassification is tax arbitrage. I never want to let the tax tail wag the dog, meaning I don't want to spend $1 to save 37 cents. I want to spend $1 and save more than $1. Two strategies you can do with that. There's more than this, but one would be like a historic easement. If you could find a building that's a historical building and preserve the facade, you can get a massive tax advantage for that, because you're not tearing it down and redeveloping it, and you can still rent it out and cash flow it and whatever you want to do. The second one is one I've used over and over, which is buying artwork. I have an art dealer out of New York, and he's an investor really, and then we buy collections of art at a deep, deep discount, because I signed that I won't sell it on the open market, so the artist gets to have a liquidation event, but then it doesn't water it down in the marketplace that all of a sudden I go sell it for less than what they would want to sell them individually. But after 3 years, I donate it to a museum, and my average is a $2 credit for every dollar I spend. So it's basically like 6.5 tax deduction to $1, which ends up being a little bit more than 2 to 1 on tax arbitrage. So here's your buckets. Every 3 years, get different set of eyes on your taxes to see, because a lot of times people get in ruts or they miss things. Every 3 months, you're meeting with your tax team and thinking kind of creatively, and you're just using this bucket of how do I maximize deductions. And look, there's a lot of deductions, like Section 199A, which is the pass-through deduction, which can lower your income quite a bit if you have employees. That's a big one. A lot of people miss. I don't know why, but that's a really good one that lowered my taxes because I had employees. There's plenty, but there's at least a framework for you to think about. Yeah.
This is fantastic. So some of these strategies we hit on yesterday, but I think you'll notice that there were a bunch of strategies that we did not even discuss yesterday. So there's so much more out there. There's so many more opportunities. And again, the key is to find the people that can be creative with you and use the tax code as it's supposed to be used. So not manipulate it, not abuse it, but you literally use it as it's laid out for you to use. And it's 99% of the time, it is pretty black and white. Right? So there's certainly some gray, and some people may want to be, a little bit more aggressive on the gray stuff. Some people want to be more conservative on the gray stuff. But most of it's pretty clear and pretty clean cut.
Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from, so go ahead and click through and watch the next video now.